Hey, welcome to Talk Tickers. Today, we're digging into Loop Industries, ticker LOOP, and their Q3 earnings call was, well, it was a real head-scratcher. You've got management telling this story of amazing progress, but then you look at the revenue, and it just completely fell off a cliff. So what gives? Why didn't the stock completely tank? That's exactly what we're going to figure out.
All right, here's how we're going to break it down. We'll start with that Q3 snapshot, the numbers that look so weird. Then we'll get into what's really going on beyond those headlines. We'll talk about the execution story, what investors should be watching for, and then wrap it up with our take on the next call. Let's get into it.
Okay, so first up, that Q3 snapshot. I'm calling this a tale of two numbers because honestly, it's the perfect way to describe the confusion here. On the one hand, things look fine, but on the other, it was a total disaster. So let's look at that first number, the bottom line. Their GAAP earnings per share came in at -6 cents. Now, that was exactly what Wall Street was expecting. So, no big deal, right? A total non-event. Well, maybe not.
Because then you look at the top line, the revenue, and wow, it was an absolute disaster. We're talking about a negative 90.9% surprise. They brought in just $80,000. A miss that huge should have sent the stock into a nosedive. And that's the big mystery we're trying to solve. Why didn't it?
And when you put it all side by side like this, the disconnect is just so obvious. Look at that. EPS, right in line. Revenue, practically zero. I mean, it's basically a rounding error. This tells you everything you need to know. The market has completely, totally stopped caring about Loop's current financials. It's all a bet on something else.
So if the market just shrugged off those terrible financials, what was it paying attention to? Well, the answer is the story, the commercialization story that management spent the entire earnings call hammering home. It's all about project milestones.
And these 4 points right here, this is basically the entire bull case for the stock. First, they locked in a multi-year deal with Nike. I mean, come on, Nike. That is huge validation. Then, they brought on Toyo Engineering for their India facility. And this is the big one. They said they have term sheets from lenders for the debt. Oh, and they also brought in a new CFO, a veteran investment banker. See, each one of these things, in the eyes of the market, helps de-risk this whole project.
And management highlighted this quote from a major apparel company. Textile-to-textile is not a nice-to-have anymore. It's a must-have. This gets right to the heart of their whole strategy. There are these new EU regulations coming down the pike that are going to force companies to recycle textiles. Loop is basically saying, hey, our technology is the solution. And they're timing their India facility to go live right as this massive multi-billion-dollar demand wave is about to hit.
So this brings us to the real crux of the issue, the execution story. Progress versus proof. And let me be clear, you can just forget about those quarterly revenue numbers. This is a project execution story now, and it all boils down to one single thing. Can they get the financing?
To really get what's going on with Loop stock, you have to understand this concept called project finance. Basically, it means nobody's valuing the company on its current balance sheet. No. Instead, investors are trying to figure out the future cash flows of the India project itself. And those cash flows, they're supposed to be backed by solid contracts with big names, like Nike.
And this slide really captures that core tension, that big conflict. You've got management's message on one side, right? They're all about milestone momentum, commercial validation. Look, we signed Nike. But then you have the market's verdict on the other side. And the market is just saying, yeah, that's great, but show us the money. All this progress is basically getting a giant discount until that capital is secured and they actually start building something.
So let's talk about the numbers that actually matter right now. They've got about $7.7 million in liquidity. Okay, but they're burning through $2.2 million a quarter. You can do the math. That runway is getting pretty short. But here's the kicker, the number everyone is obsessed with, that roughly $28 million equity check that Loop needs to write for the India project. That is the funding gap. That is the whole story right now. Okay, so given all that context, what should investors be watching for next? Well, the path forward is actually crystal clear. The market is basically ignoring everything else and just focusing on a very specific checklist of catalysts.
All right, here's that checklist. Number 1, and this is by far the most important. They have got to close that $130 million project debt for India. Period. After that, number 2, they need to sign up a few more customers to fully contract the plant. Then people will want to hear about the Europe site. But the ultimate proof point, the thing that could really make this stock move, it's what we call funded steel in the ground, when they actually start construction.
Okay, let's pull all of this together and give you our take for the next call. What you've got here is this classic setup. Really exciting operational progress, but it's being weighed down by a huge financing risk. So, with that in mind, here's where we land. We're initiating with a rating of market perform. And look, here's why. The potential upside here is enormous if they can pull this off. But the financing risk, it is just as big. So until they actually get the money for that India project, we think the risk and reward are pretty balanced. It's a classic neutral rating.
So let's talk about an outrageous but plausible trade idea here. Our thesis is simple. This stock is probably going to be range-bound, just stuck in the mud, until that India financing is definitively closed. The trigger you're looking for is a single press release, one that says the $130 million in debt is closed and Loop has funded its $28 million part. So, the trade? You could consider accumulating shares on any dips before that catalyst hits. Because once that announcement comes out, it's a massive de-risking event. The story changes from if this happens to when this happens, and that could cause a really sharp move up in the stock. But until then, yeah, expect more sideways trading.
And of course, we have to say it, this is not financial advice.